welcome to this month's episode of Brews and Benefits, where we are talking about life insurance 101, kind of what it is, who needs it, and how do you get it?
Yes, I think it's important to start with a big question.
Okay.
So think about it like this. Why would you insure your house, your car, your boat, your motorcycles, really anything,
Right?
but not insure your income?
That is a great way to think about it. I've really never kind of thought about it like that.
Yeah.
So that's important because I think,
Most people don't think about life insurance like that, but really, that's what it's for. It's
Right.
for what you have now and how is it going to get taken care of if something were to happen to you.
right.
You have a family, maybe you don't. Everybody has a family, so whether it's your own family or your parents or whoever, if something were to happen, all of your stuff has to be taken care of.
That's true. That's true. And you don't want to leave that financial burden on anybody when they're already grieving the loss of you.
Correct.
I do think people think about life insurance, but maybe it's just like, it's going to take too long to sign up for. I don't really have the time to look into it. So that's kind of why we're here today, is to give like a brief overview of the different types of life insurance. That's what we'll start off with. So there's term life and whole life. Your term life is going to kind of be self-explanatory. You pick a term that you're going to be insured for, typically 10, 20, 30 years. And then once that term is up, the policy ends, and you can choose if you want to get another term, move to whole life. The term life insurance policies are typically cheaper because, they are for that set period. People will typically use these for their income replacements, especially if they're young, have a young family, they want to take care of their kids' education. That's kind of where that expense would fall into as a term policy. Like you said, premiums are lower.
They do not build cash value.
There is no cash value. Whole life policies, those are going to be covered as long as you're paying the premium for your entire life. Maybe you have a single pay premium, so you just made one premium payment and now you owe the policy. It will have cash value. So think of it in terms of term life is more like renting. So you are putting money towards it every month, but you're not having any value put into that policy. Whereas your whole life is more like buying a house and you're building equity. So some people will get a whole life policy to have like a financial asset in.
And they can work together. You don't have to just get one or the other,
Right.
But you can also kind of use them. Say you want to do a whole life for everything, but then you have young kids and you want to make sure that if something were to happen, you can take care of their education. You can pop a term life in there too, and now you're covered all the way around.
Yeah, definitely customizable to your needs and what you are needing in life. Some of the term policies do have that convertibility option. So at some point in that policy lifespan, you do have the option to convert it to a whole life policy. So that's nice. If you're not ready to pull the trigger on a whole life policy just yet, and you're just trying to get your foot in the door with that lower premium and get some type of coverage. So some of those policies will.
In talking about these different policies, I think an important one to talk about is the Gerber policy.
That is a fun one,
Yeah.
especially with young
Little
kids. We've been seeing a lot of, maybe not the parents picking up the policy for the kid, but the grandparents. So as a birthday gift or a Christmas gift, they'll enroll the kids in one of these policies. You can choose anywhere from $5,000 up to $50,000 when you start the policy. And then at age 18, whatever amount you've picked, that doubles. So if you picked a $25,000 policy at age 18, that policy is now a $50,000 policy, and it's in their name now. So they own it at age 18.
With one of those policies, say, if there's any life changes, are they able to maybe make a change to the policy, or kind of how does Is there anything like that?
Yes, yes. And so, again, with the Gerber policy, it's a popular one because not only does that benefit double at age 18, but then if they have a kid, buy a house, get married, they have the option to increase that benefit amount without much or any underwriting.
That's good to know.
It's exciting.
That's good to know. Now that you've mentioned underwriting,
Uh-huh.
I feel like that's a nice little segue into our next little portion where we are going to talk about underwriting and the different types. There's traditional, there's simplified issue, and then there's guaranteed issue.
Yes.
So a little bit of a breakdown of each one.
Yep. So your traditional underwriting, this is going to be where they ask you health questions. More than likely, you're going to have a paramedical exam, so blood and urine samples they'll take. They do actually look back at your driving history, so you want to just make sure that you're a safe driver.
It's not one I would ever think about, so
Yes.
glad we mentioned it.
Yes, and then also your lifestyle. Are you a pilot? That's going to require maybe looking at different carriers who are more pro-pilot in their underwriting. Another one is skydiving. They're kind of leery about skydivers, but that doesn't mean you can't get insured. It's just you're a high risk taker. So that's traditional underwriting. It's going to be the most extensive of the three. However, it's going to allow you to get that higher amount of benefit for a lower premium once you go through all those questions. So for traditional underwriting, that's typically going to be benefit amounts around 100,000 up to, the 10 million mark is what people will do traditional underwriting for. Simplified issue, you're still going to have health questions, but you're not going to have the paramedical exam. It's kind of more of a quick. However, you don't get such a large benefit amount. They typically go up to like a $50,000 benefit amount. And then guaranteed issue. Guaranteed issue is not going to have any health questions, no paramedical exams, so you pick your face amount. So that's the benefit amount that would be paid out if you were to pass. And so on the guaranteed issue, typically it's going to be anywhere from $5,000 to $25,000, and people will also call this final expense, final expense life insurance. So it's still a whole life policy. So as long as you're paying on that premium, you have it in force, but it's really to cover, like it says, final expenses, burial, cremation, funeral expenses, so it's not put on your loved ones after you pass.
Yeah, and I apologize if you mentioned this because we had a question that I was reading, which will segue into our next section. But did we mention any look backs on the things for like the traditional?
Yes, so some carriers, and all the carriers are different in their underwriting. So that's why we definitely want to sit down, ask you these questions, go over them with you so we know kind of which carrier favors, different health issues, different lifestyles. So for example, if someone has cancer, some carriers, that could be an automatic denial, or if there's been a long enough time from when they went into remission to when they're applying, carriers will have a look back period. So it might be, well, have they been in remission for 5 years? If so, we can issue them a policy. Also, recovering alcoholics. Some carriers will automatically say that's a denial. Some will say, okay, have they been in recovery for 5 years? Are they taking steps to continue on that path and journey of recovery? And anything that you can kind of build that carrier's confidence to say, yes, this person is changing their ways, definitely give them a chance. They'll take all that into consideration.
Yeah, so you're not just written off
Right.
for your past. Everybody has one, so
Yes.
it's
And
fine.
We do a lot of field underwriting, so we don't want to just submit to a carrier, because one of the worst things you can do is get a denial. That does not look good when you try to maybe reapply. So we definitely do our homework. We talk with the carriers, we talk with our representatives to really make sure that once we pick a carrier and pick the policy, and not a guaranteed path forward, but you have a very good chance
Yeah.
of getting approved for that policy.
Yes. So I saw a question on here and it says, if I have a policy already, can we look at it and make sure it's best for me? Which is perfect because we were going to talk about that. We do come across a lot of people who have policies currently, but they may not be meeting their needs now. So say they've had a major life change, they've had kids, they've gotten married, maybe they've changed jobs and their income is different. They bought a house, anything like that, started a business is another good time. You should always go back and take a look at your policy, make sure that it is meeting your needs. And if it's not, you don't necessarily have to end that or anything like that, but we can also look at, like we mentioned, customizing different plans and maybe adding some or something like that.
Yeah, definitely. We would always love to do enforced policy reviews, and like Britton said, that doesn't necessarily mean you're gonna get rid of what you have. Maybe you just need a little bit more. And we'd love to dive into that with you and get customized. There are a lot of myths though when it comes to life insurance. When you talk to some people, they'll say, well, it's just too expensive. That's not really the case. If you just kind of want to get started with life insurance, term life insurance is not that expensive. You could probably skip a cup of coffee or maybe your Sonic drink a day and pay for a term life insurance policy.
Another one that we hear is, I already have it through my employer. And while that's great, a lot of times your employer is not taking into consideration anything outside of employment. So generally with employer life insurance or employee life insurance, you would just get like 1 to 2 times your income, which definitely would not cover anything outside of the job. And on top of that, most oftentimes it's not portable.
Right.
So if you no longer work there, it's gone.
Right.
You have nothing.
Right.
So,
Well, and again, with employee life insurance, you do have to opt in if they even offer your spouse's
that's
life
another good thing
insurance.
to
You
do.
have to opt into it, and more than likely, you'll pay for it. So a lot of the times, people, when they sign up for their employee health benefits, they'll go ahead and just say, well, my employer's paying for it. It's typically a lot that we see are 25,000, 50,000 policies. Again, that's, something is better than nothing if something were to happen to you, but like Britton said, it's a very small portion of what you may actually need.
Yeah.
And did we go over kind of the rule of thumb amount of life insurance?
I don't think we did, but they say that for life insurance that you typically need 10 to 12 times your income.
Okay.
Yeah.
Annual income.
Annual income.
Okay, that makes sense. And sometimes it's not even based about income, maybe you have your debt, like Britton said earlier, you want to pay for your child's education if you're no longer here. So we factor that in as well.
Again, needs analysis.
Yes,
that we
it's all
mentioned
about
earlier.
needs analysis. Yes. Some people think, I don't have kids, so I don't need life insurance. Well, like Britton was saying, that's not always the case. Maybe you start a business, maybe you have student loans, or you have a house, you have a spouse. It's just more about not putting the financial burden on who you're leaving behind when you leave them behind.
Yeah.
So.
Yeah, another one we hear would be, I'm young, I'm healthy, I don't need it yet. But really, that's when you should get it, because that's when it's going to be the cheapest. So, get it now. Protect yourself. The younger you are, the better off you are.
That's right. And just kind of wrap things up, life insurance doesn't have to be about death. I know a lot of people don't like to think about life insurance because ultimately you're thinking and you're planning for your death, which is inevitable for everybody. So
Does happen.
we're all, death and taxes, we're all gonna, well, anyway, at some point we will all come to our end. And so you just really, it's more about the people that you love, just not adding on to that grief that they already have. They've lost you. For example, when my dad passed, he did not have any life insurance. His death was not unexpected, but it was, anytime you lose someone, it's still a sad time. And so we did the very minimal for his final, not final expenses, but
Burial.
yeah, so we had him cremated, we didn't do a big funeral, and still just having $10,000, $15,000, that would have helped a lot in with his death and not putting all that on there.
Yes. Well, I think that that's all for today.
Yes.
I don't have anything else to say.
So either, and our lights.
We don't know what's happening. The past 2 times, it's never happened before. We're gonna have to figure it out.
Yes, but thank you for joining us. Leave your information, call us, email us. We'd love to go over more details if you have questions. This was kind of just, again, 101 and the tip of the iceberg.
Yeah. So reach out to us. We'd love to talk to you.
Have a great one.
Bye, guys.